Hi everyone, this is Eric from Traders Helping Traders with this weekend's Tricks of the Trade. Many of you will recognize this as last week's homework assignment, and it is such an important concept that I want to use it for this week's lesson. So here we have the March Euro, and the question was, how do you think Erich would have traded this market? How would you trade it? And thanks to Dave and to Alan at the forum for their participation, you guys hit it bang on in how I would have traded this particular market. Now let me point out a couple of things that are quite interesting. First off, notice that the market has come down and shown us support at our 20-day moving average. In fact, let me just back this up one day. It'll make it a little bit more obvious. Remember, this is support. When the market comes down, we have a red bar followed by a green bar in an uptrend. That is the market showing support. And as you know, the 20-day moving average is a very important line for us. Not only does it show us the monthly average price, because there are 20 trading days in a month, but it also is one of our most important tools to help highlight where important support and resistance is likely to occur. So here we have 2 days back to back where we have support formed around the 145.80, 145.90 area. So what should happen the very next day? Well, the very next day, the market does not bounce off of support as it should, but rather it puts in resistance. Remember, support is a red bar followed by a green bar, and resistance is a green bar followed by a red bar. So we have this market now telling us that support is in jeopardy. Remember, when a market forms support or resistance, there's only one of two things that can happen. It can either bounce or it can break. And since support occurred near our 20-day moving average, which highlights important support for us, we would expect the market to bounce from here. But it didn't do that. The very next session, the market puts in resistance, and now it looks like it's going to head lower. So this is what the chart looked like when we posted the question. And how would we trade it now? Well, it should be rather obvious because it looks as though support is in jeopardy. We would be looking to sell this market short. And Alan and Dave, they both put together excellent targets and stop losses. Just a quick overview. We would like to put our stop ideally above the high of this day. But of course, this is the euro, so that's terribly expensive. We would probably have to opt for this area of intermediate resistance through here somewhere. You can see there are quite a few hits on that particular price. Our entry would be below the proven support. And our profit target, well, we know we have reactionary support here because the market bounced twice off of this price already. And then if we broke through there, well, then we would probably head down to this cluster of support somewhere through here. Now you could probably make it a little bit higher, aim for this gap, but that's probably as far as we would want to press this market. The very next day, the market gave us a perfect fill, or would have given us a perfect fill. This is actually the combined session. On the open outcry or the pit session, we were actually gapped, but it shows you that this principle does work. The market fell off, broke support, made a rather substantial move to the downside, and regardless of where your profit target was, you would have easily attained your profit for this particular trade. So keep an eye on how the market reacts around our important areas, our 20-day moving averages, our trend lines, and look for the bounce or the break. and you'll find yourself on the right side of more trades and making more money. And that's this week's Tricks of the Trade.